Hello, everybody. Thank you so much for joining us. We're just going to wait a few minutes for everyone to log on, and then we'll get started. Welcome, everybody. Feel free to use the chat. Let us know where you're dialing in from, which company you're with. We will try and make this interactive. We, as you can see, have an incredible panel with us today. So we're going to have quite a lively discussion. But we do want to hear where you're from, if you have specific questions, to really help us cater our content to you. So feel free to use the chat function, and then we'll also have the Q&A function if you have specific questions for the panel. We'll just wait one more minute. I'm cognizant I want to make sure we really use up our 1 hour effectively. So we're not going to wait too long, just another minute. I think we're going to have really nice geographic diversity. Our panel is currently ranging across the world from the US to Europe to Hong Kong. So really covering global participation. I can see we've got people dialing in from Vietnam, Venezuela, South Africa, Romania, Cambridge, Honduras, Singapore. So this is really exciting to see just how international the green building discussion is and how relevant it is for everybody around the world. Australia, Paraguay, this is great. Thank you so much for joining, and thanks everyone for dealing with lots of different time zones. That's quite quite the range. Saludos, Mexico. Hello, everyone. So I am going to jump in just to make sure, again, we're using our time wisely. Big welcome to you all, and thank you so much for joining us. Truly very excited to see the diversity of participants today and the diversity of our panel as well. We have quite a great panel and a really big topic to cover, so we'll jump right in. Just a couple of housekeeping notes. So we are recording this panel and we'll be circulating the recording after the event, so you will be able to rewatch it. We also have a Q&A function, so if you have specific questions for the panel, please do use the Q&A to include them. We have specific ideas of where we want to go, but we do want to incorporate your feedback and questions. And if we don't get to your specific questions, all the questions are looking at a specific project, for example, we'll get back to you via writing at the end. I'll start with some quick introductions and then we'll dive in. My name is Eleni Policriniadou, and I'm the Commercial Director at Centali. Centali, in collaboration with SGS, acts as an Edge global certification provider for IFC. Now, today I'm joined by really quite an amazing panel, and I'm very excited to introduce them all. First of all, we've got Tracy Harris Wong, who's the Head of Sustainable Finance for Greater China and North Asia at Standard Chartered Bank. Tracy's going to share some insights from the lender perspective as she leads the charge for green buildings at the bank and is pushing to decarbonize the built environment. We also have with us David Willock, Managing Director and the Head of ESG Finance and Structuring at Lloyds Bank. David leads a team at Lloyds that helps corporates shift towards net zero and is going to share insights from helping to green the real estate and housing sector in the UK. We've also got with us Vali Kamisani, who's a principal at IFC. Vali leads the upstream tourism, retail and property division at IFC and is going to share insights from the development bank perspective and about how IFC is innovating in the real estate sector to accelerate investments globally. Shifting onwards, we've got Joseph Daniels, who's the founder and CEO of Etopia Group. Etopia is a leading residential developer building zero carbon homes around the world. Joe's going to share insights about how he successfully secured green financing from his company and how he's deploying net zero homes around the world. And finally, we've got Harry Fennell, Global Head of Real Estate Solutions at SGS. Having worked in the industry for many years and worked with multinationals and building owners, Harry's going to share how his clients have successfully received green finance for their real estate projects. Now, a few short comments from me and I'll shift over. As you all know, the climate crisis is upon us, and it is more urgent than ever to reduce global greenhouse gas emissions and keep warming to 1.5 degrees above pre-industrial levels. The race to net zero is on. And what does that mean for the built environment? Today's buildings generate 19% of energy-related greenhouse gas emissions and consume 40% of electricity globally. So they contribute significantly to the challenge that we face ahead of us. The good news, though, is that there's also a significant market opportunity. So IFC has calculated that there's a $24.7 trillion investment opportunity in emerging markets alone by 2030 in green buildings. Now, add all the existing real estate assets in mature markets, and I don't think I need to say any more about the scale of the potential here. So that brings us quite naturally into the first question, which is, if there is such a big investment opportunity, why aren't we seeing more green buildings globally? Have there been specific challenges in financing green real estate? And Vali, I think I'll start with you and ask you to open up the conversation in the panel and share your perspective.
Thanks, Eleni. IFC's experience has been quite diverse in this space, and we have invested quite a lot, but there is this real gap that Eleni, you were alluding to, the size of the market versus what we've invested. So we've done about 7 billion, but it's still peanuts in terms of the size of the market and the opportunity. And one of the biggest learnings that we have had is that there's a symmetry of information between investors, developers, builders, and end users, and really a lack of clarity on who keeps the benefits of going green. And I think one of the ways that we are trying to tackle this, we have done it through our traditional business as well. And what we feel is missing is this lack of knowledge, awareness, and education among all the stakeholders. And what we are trying to do through innovation is to see how we can bring all these pieces together, because we believe that awareness and education would show how developers can access better financing terms through green finance and other products available. Awareness can demonstrate the end users of how they would enjoy the utility savings going forward. And awareness and knowledge can also show the investors that they're getting a better portfolio with low default rates by going green. And I think through technology and progress in the world in general, we believe that this can all be achieved with much smaller incremental cost than previously thought. So in summary, it is really the knowledge, awareness, and education, which I think will help provide a wholesome solution for this issue. So with that, I'll pass it on to my colleagues to chime in.
Maybe David, you can jump in.
Oh, yeah, sure. Afternoon, everybody. So I think one of the things that sort of, when you compare the real estate sector to other sectors is obviously from planning to land acquisition to planning to delivery to letting up, it's quite a long lead time. So there is always sometimes a bit of a lag in my view in terms of delivery. So from concept to strategy to delivery, there's that sort of lag. I think clarity on definition. So what are we trying to measure? So the data side of it, standard side, but also what does good look like? Because I think that's kind of evolved a bit. And I think if we're honest, it's around the business case. So that has been one of the things, the lack of clarity around the business case. What is the economic case for this? And we'll come on to that, I'm sure. But also as part of that, the end user demand. I think that's been an important driver, because these are the economic drivers of why people build, why people invest. And I think there's some of the things that maybe over the sort of last decade, they're becoming more pronounced now, but maybe that going back to the long lead time, they're definitely factors that have fed in my view.
Definitely. Tracy, how has standardization played into how Standard Chartered is looking at green buildings? I know when we've had a conversation, you said actually buildings aren't that complicated to invest in from a bank perspective.
Indeed. So thank you for having me today. And so good day, everyone online as well. So I think it's a very good question on given the 25 trillion funding opportunity. So why are we seeing more green buildings in the world? I would agree with Vali's point earlier about some of the key challenges being the lack of know-how. So how to turn real estate into green, how to access to green financing, and to scale up, and how to transition the whole building sector into net zero. And to your point, Eleni, I mean, if we take a step back to look at the whole landscape of green and sustainable finance across different sectors, green building is actually one of the easier one to address, to convert, leveraging a number of green building certification available across different jurisdictions, which qualify for green financing. However, I see the challenges lay within the green building certification system as well. So not all certifications are the standard that you call it, Eleni, about not all certifications can be applied to existing buildings, which is the biggest population we need to decarbonize, and not easily applicable to different building structures, for example, data center, warehouse, hospital, or at portfolio level. And also, finally, I mean, a clear net zero pathway with transparent, quantifiable measure on energy efficiency, embodied carbons, you name it. So I think these are embedded problem within the standard certification itself. So yeah, I think it goes back to the know-how on also knowing how and which certification can be addressed some of these pain points.
I would actually, if I might jump in, add in there as well. We do see from several building owners or multinational building owners that green buildings are still seen to be a luxury good. And it's a bit, if you will, playing also in what David said, what is the business case, right? If you look at many global building owners or multinational building owners, almost all of them already have green strategies, right? Strategies on how to build green. But what they're mainly focusing what they're focusing on is how to build future buildings green. And what Tracy, or what I hear from Tracy as well, is where is the strategy for the existing building portfolio? How do we green that? And what I see from our clients, from multinational clients, is there's on the one hand, there's a bit of a lack of awareness that that's actually possible, right? There's a lack of awareness on how it is possible, so lack of awareness of a possible solution, and thinking in towards net zero, it will be required, right? So it's interesting for me to hear also from Tracy that that's actually an easy investment, the real estate investment. I personally think, looking at the majority of buildings which are existing, that's the big opportunity, and that's the big market potential. That's the big potential to come to net zero. I think it needs the next step from this. I already have procedures on how to build green in the future or sustainable in the future, towards how do I transform the existing stock I'm operating or owning towards a net zero future, with, of course, support from financial institutions, because it will cost money. But the big question, as David said, what's the business case? Money doesn't necessarily mean losses. Money, when you build sustainably or green or efficiently, means a return of investment. And I'd be interested in hearing from Joseph maybe as well, from a developer perspective. How do you see challenges?
Yeah, definitely. For me, playing this kind of developer builder, you could call it, role across the world in different locations, I think one of the key things is understanding what's going to be integrated, and that a lot of companies try to do all things. You get a lot of companies that are building complete boxes and trying to solve all problems as all things, but ultimately when you break that element down, it kind of does come down to the energy you use, the construction approach, and what you put inside this box that makes it intelligent. And I think acceptance in the market and at a legislative level to uptake new and innovative technologies inside the value and supply chain will help drive and adapt that core element. But then what you also have is when you build these greener, better buildings, or you implement these retrofittable, amazing green technologies, is the consumer behavior and learning patterns. And I said something the other day at a convention which struck some chords, is we can all get our phone out and tell you exactly how much data we have. And we can all, if we have an EV, look and see exactly how much charge it's got. But for some reason in the residential and real estate, we can't even tell if we've left an appliance on our home, and we definitely can't see exactly how much energy by the second our home is using in all instances, never mind new buildings, never mind old. So I think that there's again, it comes back to that point Valley made, is that, and that education piece at the beginning is very important. How do we educate, but also what's being uptaken, and then those technologies, when they're approved to make impact, that's what I believe when the comments David Tracy and, as you said, Harry, come into play. And it's like, we know these works now, how are they utilized in these environments? And then how do they benefit the future for accreditations, processes, and things such?
Definitely. So a lot of questions around education, around perception, around how we're defining things. Another barrier that one of our participants has identified as well, which could definitely play in, is the number of stakeholders involved throughout the life cycle of a building, and how that then ultimately affects the ability to get some of these projects done, because it gets quite complicated when you have a lot of people involved. And I'm seeing a lot of nods. So I think, Rebecca, thank you for your comment. I think the panel agrees that that is a challenge. Now, we've gotten a couple of questions which sort of tie into this. Okay, so we know that there's an issue of standardization, which has been brought up already and discussed. So how do financiers, how do lenders, how do banks, how do development banks really identify green buildings and identify these potential investments? What are the criteria that you're looking at?
I'm happy to kick off there, so and see where we go. So I think, certification has played and will continue to play a big role, because at the end of the day, some of these topics are quite simple, but some of them can be quite complicated. So I think that whole third-party community, certification community, is really important, because increasingly investors, be them on the equity side and the debt side, they need to be able to evidence to their investors and their stakeholders, look, this is credible, this is why this source of finance, this flow of finance is going this way, this is how we're getting comfortable. So I think certification is important. I think increasingly data. So as we know, for those that are ultimately, obviously the EPC performance gap sort of issue and design intent, you talked about different stakeholders, design intent versus what's actually delivered. I think real world data is going to be something that lenders start to ask for more, actually, which if you went back 3 years ago, lenders in the UK would not be asking for that. But increasingly, I think that flow of real, actual in-performance data. And I think simple things around due diligence, when we're looking at physical risks, when we're looking at future stuff around flooding and climate resilience, I think that sort of DD about the environmental side will just get bigger and bigger in terms of the scope of that work. So I think there are some things I'd sort of kick us off on.
Yeah, so supplements, and started with, like David said, about certification, and in additions from some of the financing tool, which I'll talk about more later. But to tiers one out is sustainability linked product, where we actually have the actual target, for example, energy efficiency target or water efficiency target that lock into the duration of the lending. And every year we actually hook the borrower to the target, and the margins are tied to this kind of performance. So to the point of Joseph, the data points to how to really facilitate from the lender's perspective to get comfort that the actual borrower are delivering this energy efficiency, water efficiency, embodied carbons reductions target for using some of the financial structure.
And yeah, I'd like to add to that I think that's exactly it. It's being able to utilize that data. So we've got experience, and I think local regulation is a big deal about these things. So we can go and build you this net zero building, but in America, they've got their own process, and the Middle East and sub-Saharan Africa and the UK, and even breaking into the edge discussion, why I imagine most of us are here. It does come down to two parts when it comes to link to financing from a delivery perspective. And that first perspective is we can design and provide a building that's incredible, that is way beyond net zero. We built a house at the Building Research Establishment Park that's 5 times energy positive. It's amazing. But once that's handed over to an occupier on a residential level or a community-based level, to get the true net zero outside of design and delivery, you then have to have the consumer accept that net zero. So we know it's edge net zero for the consumer. We have to get them to agree. So if we sell them a home, they have to say, I'm going to do this. And it's a weird dynamic that, you know, we don't go to Tesla and say, well, hold on a minute, I'm not signing on to give you my warranty because I deserve 100,000 miles. So I think what it's that approach to design and working, as Tracy said, with the institutes to lock in mechanisms that benefit those consumers. You know, hey, consumer, if you commit to the net zero, yes, your mortgage will be cheaper. But right now what we do is we say, well, the building's green, so here's some benefit at the front end. But it's the life cycle of that product and the support that we can give consumers that if they save bills, they will also potentially save money on their mortgage. And that's a way of linking in those two behavior patterns of the developer and the consumer.
I think what's also important is that the recognition that this is a journey of sustainability that we are taking the borrower through or the sponsor through. I think that recognition by the financial institutions is critical, and then also the absence of clear strategy and an implementable plan and pathway towards net zero is the missing piece that we see in our sponsors, in our clients, and you know, we operate in emerging markets, and that's essentially what we look for. It's not just the check mark that the client is looking for, and we you know, it's a journey, and that's a clear client and a client that would deliver on a long-term basis, and I think some patience from our end as well as recognition of that journey is important.
I think, and I think that's a good point, the journey perspective, because it is a journey in the end, right? I mean, we're not gonna, you know, flip a switch and then we're all green, right? It's developing over time, innovating over time, progressing, right? The journey perspective for me means that, you know, there might not be all solutions available right now, right? It's a journey. The whole market will hopefully evolve as well. Financial market likely, the construction market, the user market as well. So, you know, how we use buildings hopefully will evolve as well. But I do see that there are many solutions already, and companies are starting already not to prepare to start the journey itself. And in reality, we only have like, I don't know, a couple of years. We need to start the journey, right? We cannot just stop and say, okay, let's wait until the final solution is there and then I buy it. We need to start to together progress, innovate, and evolve throughout the journey.
Definitely. And Harry, just to build on that and ask you a follow-up question before I shift into another question, is we have a comment from one of the participants saying that, you know, the regulations are becoming more stringent and the government is taking a more active role. And how much do you think actually the government's taking a bigger interest is going to encourage innovators to genuinely be innovative in decarbonising their portfolios? How do you see the role of government? How have you seen that affect some of the clients that you've been working with?
I would see, and to be frank, what the government pushes us to do is usually the minimum. I think there are a lot of benefits in just doing more, in doing it faster, doing it more efficiently, and doing it to showcase that it can be done. I think governments will play a very big role in pushing, if you will, the last of us to also follow. But I see on the markets that specifically big companies or multinationals, they are looking for solutions already. They have to start. They see the immediate need. So I hope that we can be faster than governments will push us to do.
Maybe David and then Tracy.
Yeah, I just to come in on a couple of bits there. So I think something that Harry mentioned about the role of regulation. Now, clearly, if decarbonisation of buildings was really easy, it would have already happened. So the fact is, these are quite complex issues that require a whole heap of different activities. But when we launched our Green Lending Initiative in 2016, so that predates the LMA, the Loan Markets Association Green Loan Principles in 2018, and the Sustainability Linked Loan Principles in 2018. So it's fair to say in 2016, the environment was very different. So there were just a lot less people who were already in a good spot in terms of their buildings, but also in terms of their strategies. I think fast forward to now, I do find the balance is a little bit different, particularly in the large corporate space and the mid-corporate space. And I think Harry raised a really important point about, I talked about building certification, so that's asset level financing, but the big trend in the UK, and I'm sure in other markets, is around the sustainability linked loan side, so at company level. And I think that's really important around, setting a clear sustainability strategy. What is this company trying to do over the long term? And then KPIing those, so linking those to the financing, which Tracy mentioned. So we're seeing that there's a huge trend in the UK and other markets at the moment. So more asset finance, but then also more corporate level financing that's sustainability linked.
So I would just add there to the government's point. I would agree with Harry commenting that government's definitely not going to be the most aggressive in setting the floor, but I think some of the actions important as well. So going back to a lot of the originations of local developed green building certification, some of them when it started, normally you will see the local government's support. So for example, in Hong Kong, the local green building certification, BIM Plus, actually for all the new builds, if you apply for such green building certification, the government will have a 10% growth floor concessions. So which is, if you build 10 floor, you have 1 floor for free. So that's why it's driven to the local market in Hong Kong. Every other buildings already green buildings from new build perspective. And then we have seen other local government initiative in other locations to really trying to support the green building strategy. And also to the latest developments with the net zero targets being set across so many countries around the world. And that target setting is important. That signal what the property owner developer needs to do and move forward. I think that's also very important. And we have seen an enhancements of some of the regulations going in to address embodied carbon as well. So I think we all plays a part and they're all important across.
Yeah,
absolutely.
And I'd love to add to that, of course, the reason that, I'm in attendance today is that ourselves and Lloyds have taken this journey on green financing. And we as a company, there's a number of things like the first UN net zero house builder, etc. But one of the things that we're actually not seeing on a local level, on everywhere we go. So a number of states in America, obviously with Sub-Saharan Africa still emerging its trajectory and working alongside EDGE, across Europe, etc., is that whilst the talk of net zero is a big plan, if you have the highest offer, you can still build something more traditional in place, i.e. land and planning new buildings and refurbishment of old buildings isn't defined on performance. So what you've got at the moment is complexity of a number of places saying we're climate change emergency, we're setting definitions. But if you go and buy that old building or that piece of land, if you put in a bid that's a few £100,000 more than the net zero company can afford, there is zero benefit, which means what we're again doing is we're looking at the economics. And now the private institutes, such as the amazing work that Lloyds, Standard Chartered, etc. are doing, is enabling private developers to take it green. However, shouldn't the government say, actually no, if an opportunity comes for net zero, where someone that has proven delivery, or if an opportunity to buy that building with someone who can retrofit net zero technologies come, we should be inclined to give them the opportunity to buy it at market rate and not create bidding wars on more carbon. And I think that's a big thing government needs to stand in and do, because right now it's down to us as private institutes to solve the climate change problem, where the governments are just saying standards without really giving any real principles or drive.
Which maybe brings us into a very natural question of, if we circle back, we say, okay, there's definitely interest from financing, there's definitely interest from governments, although maybe the implementation is still tenuous. And we've talked a little bit about perception, the lack of education, and kind of building on Joe's point. So if we have situations where there are two options, traditional and sustainable, is the perception of green buildings actually affecting the ability to implement? Is there a risk by going for a green building, both kind of from the developer side, but really from the financier side? Is there an actual risk from the lending side to invest in green buildings? Or is it just market perception and we're kind of sticking around to this idea of what is the cost of implementing it, and we're ending more into this economic argument? Maybe I'll start with our financiers first.
Tracy, I'm not sure. I'm not sure where to start with that. So I don't know, Eleni, if you want to give me another prompt on that one. I think
if I simplify the question, is there a bigger risk for you as a lender to finance a green building as opposed to a traditional build? And if yes, why? What is that risk?
Okay, no, I get that. Thanks for simplifying it for me. As you can tell, I'm a simple being. So look, I think Joseph alluded to this around modern methods of construction. So yeah, for example, I financed across an extension of an office building in London in 2019, where the extension is built out of cross-laminated timber. You can imagine, speaking to our credit colleagues at the time, we hadn't done a ton of that. So, but we got there, through diligence. But so again, it comes back to that part, that point around importance of diligence. To get people there from a risk side, it's just basic banking. If you're doing something different, you need to be able to articulate it, position it, evidence that it's doable. So yeah, some things around the edges clearly are going to be more difficult. But however, I think with modern methods of construction, some people would argue some of those aren't particularly modern at all. Some of the technology's been around for quite a long time. So I don't necessarily see it as a barrier in extremis. What I would say is through the Task Force for Climate-Related Financial Disclosures, that programme, including its mandatory needs in the UK, for example, in 2025, that's really helped people start to think through physical and transitional risks and start to play that into, okay, how does this work on an asset level? How does this work on a regional level? And I think that starts to debunk some of the conversations maybe. It does make it a bit more confusing in some places, but I think it starts to bring that more to the here and now, if you see what I mean, rather than a sort of mathematical modeled exercise. It's like, okay, that's that, but how does it relate to today? So I think the other thing that brings is more of that conversation into the credit process. So if we're suddenly starting to model things out 10, 20, 30, 40 years under different climate scenarios, it brings it back to the modern day of, right, okay, what will happen to this asset over the long term, particularly if you're invested for a long time on the equity side or the insurance side. So hopefully that gives a little bit, and I'm going to stop there.
So yeah, I would agree on David's point about the traditional way of looking at credit. So in theory, so applying the traditional risk profiling perspective, there's no difference. Looking at green building or non-green building or green real estate, non-green estate. I mean, because at the end of the day, if you fail a green building certification, it won't result in event of default. That's the bottom line from a traditional view. But however, to David's point about when you bake it in, the physical risk, the climate risk, etc., we do believe that green assets have a lower default rate and are more resilient during downturn. We have seen this during COVID, where ESG index outperform traditional benchmark, and China did an empirical study looking at comparing corporate loan, traditional corporate loan to green loan, and the default rate were provenly lower. So with that, to turn it into even more easier layman term, I always borrow this quote from Vivek from IFC. So he will always say that if you have two identical buildings, one is green building and the other one is a traditional building, in 5 years' time, which one do you think that is worth more? So just that.
Great. So yeah, from an IFC perspective, also, I think there is, yeah, totally agree with Tracy in terms of, we're looking at it from a credit risk perspective. Nothing changes from that perspective. But as a development financial institution, we're actually looking to give more incentives through the sustainability linked loans. And in certain other value chains, we are also have different rewards for different levels of green, which is not happening here on the real estate side yet. But we are looking to learn from that product on the textile value chain. where we are, giving different levels of interest rate cuts for different levels of green, as I mentioned, and how can that apply perhaps in as coming back to that journey story, that as the journey goes through, as the journey improves, they get the long-term benefits, as Harry was mentioning, not just at the start. So we're looking at those products and ideas and engagements, and hopefully help more in terms of how to come up with a more solid product out there in the market.
And I think that's actually someone in our audience had that question of how does that even work in terms of, from the lender perspective, to have an energy efficiency target, given that it would take a few years to meet those targets. Tracy, I know you mentioned also some sustainability linked products. Do you have any examples in the real estate sector about how kind of that transition, maybe decarbonisation being the ultimate goal there?
Yeah, absolutely. So basically, when we use sustainability linked product, it can actually you see that apply from property developer or owners, from bond format, loan format, sustainable trade formats, like that kind of applications can be applied to different financial products. And what that is during the terms of your loan or borrowing, every year, the target that you set, for example, you can say that this building needs to be energy efficient, improve 5% per year for the next 10 years to achieve the net zero goal, etc. So for that, every year at your target setting date, we will check. So you need to have external verification on that number that you provided, and then we check. And if you achieve that target you promised upfront, then we'll give you a discount on the borrowing. However, I have to say the sustainability link product can be both ways. So it can be incentive and penalty. So as if when you fail delivering the target that you committed to do, then there will be a penalty setting. I was going to go through this example later, but maybe I can walk you through now on one of the Hong Kong property developer did on its SLB, sustainability linked bond, where they committed to have all their property across the Greater Bay Area to be 100% renewable by the end of the term of the loan. And in the case that if they fail to do that, they will purchase a 25 bp carbon credit offset as a penalty. So this is you can see the beauty of how the decarbonization's net zero articulation using this product.
And I think that ties in a lot to some of the questions that we're seeing from the audience around, how can banks and financing institutions really incentivize the market? And I think that's a really good example that it's not always by giving preferential loans. It's actually sometimes by penalizing those that are not going green, because ultimately, if we're looking at this long term, if everyone's going to do this, at some point, it's not going to be about the incentives. Right now, the incentives are helping to get those first movers across the board to really show how scale can work. But then it's going to flip a switch, just like with regulations, right? We see government regulations incentivizing green. At some point, they're going to start penalizing not green, because green is going to be the status quo. One of the questions we've gotten, which I think is quite interesting. Oops, sorry.
Eleni, can I just mention just quickly on the question that was there about energy efficiency and how do you map, long-term trajectories to 2050 in the short term? I just wanted to flag two quick things, which are, see, the Science-Based Target Initiative. So there are a number of companies in the real estate sector that have committed to certain trajectories, but also, and apologies for those that are not in the EU, I'm not sure if it's accessible, but the EU funded the CREM tool, which people can use to sort of plot decarbonisation plans out there. So what I would say is that it is possible. Now you do have to then obviously make sure that it tracks in the length of your loan, if you see what I mean, because an important principle of sustainability linked loans is the action happens during that loan. You're not doing a loan and you're waiting, a load of promises now and it's going to happen in 25 years time. You have to see material action during the life of the loan, and the LMA sustainability linked loan principles are really useful documents, I think, for accelerating market participation action in that area.
Thanks for that, David. Joe, a question for you. So we've heard from our financiers today that there is finance available. From your perspective as a developer, and this is a question from the audience, what's the benefit for you to access green finance as opposed to traditional finance? What is the extra incentive to go for that particular pool of money?
I think there's one that is a fiscal and then one that is a social. The fiscal is that in reality, driving forward, sustainable development in its current state will get access to reduced financing rates. And when you're working, as we are, with SME developers, small to medium enterprises, these smaller developers, 2 to 3% on their loan term, which is more like a state loan kind of number, is hugely beneficial. It can mean the difference for them delivering a really quality site and a not quality site. And it also allows for some of the competitiveness of the costing structure of a sustainable home to be met as well. Then there's the social. We are on the tips of every single institute pretty much in the UK. And that is because as an organization driving change, when the planning legislations for net zero do come along, and these traditional debts come along, which is, you know, what Tracy alluded to, these penalizations for not delivering, the conversion of that supply chain at such a drastic time, because you're right, Ellen, it will be at the drop of a hat. One day you're going to wake up and go, can't get planning anymore, or you're getting taxed on your carbon, which is a gas, which could even come in COP26, it depends. What's going to then happen is those that are first in line, those that were forward thinking, those that were working with the institutes are going to be the ones that get the discussions. And I think there is something very important about being at the front of that queue of change, and not being left at the back, so that you can drive forward that change. So I think there's a couple of different ways in which the institutes enable it. But again, it's aligning with accreditation. If you are a developer and you are thinking about stepping forward, I do recommend that you take a look at what Edge do in terms of the design approach and then the occupancy approach, to understand the difference and understand how you can offer your product in alignment with these amazing protocols and at a cost that's affordable to developers. It's very important. The banks need to see proof, and the best way to prove it is to work alongside the accreditation bodies and use tech to get there if you can.
So if we just keeping an eye on time, we've got about 20 minutes. So I definitely want to spend some time looking at the solutions, at what kinds of products are available, what kinds of different routes are available. And one of the questions that's come up quite a lot is the difference between the availability of finance for new construction versus retrofit refurbishment. Is retrofit refurbishment even considered the same thing by financing? And what kind of options are available? Now, each of you from the financing perspective are covering different regions. So it would be, I think, interesting also to talk about the geographical distribution of what you're looking at, and if it is applicable in other regions around the world, or if it is specific. So I know, of course, everything is different in every region, but maybe Tracy, I'll start with you for this question.
Yeah, so I think this questions, I think about alluding to, you know, the multiple different stakeholders involved across the whole building ecosystem. And therefore, you do need different financial products and structure to cater across. So I think we talked a lot on, and it's very well known from top of the capital market, the big corporate with bonds and large loan item, etc. But in addition to that, I think we hear a lot, even from Joe mentioning SME. So sustainable trade is a product that we just rolled out on really addressing financing construction company, building material supply chain, you know, in that area. And ESG derivative, you know, the hedging position as well, that can also be tied in, green deposit that we offer, and sustainability link product we talked about a lot already, so I'm not going to repeat that. With that in mind, and also all the way down to retail, green mortgage, which we already heard at this panel, I think it's also very important. So we are looking to also roll out green mortgage across multiple cities, and that matters because that also drive from the big guys on top in the capital structure all the way to the smaller guy, to the SME, to the retail market, through and through across the ecosystem. And I think that's an important and healthy continued innovations that we need to do. And of course, on top of that, I will always have to bring this up. To close the loop, once you have the underlying on the green mortgages, is about securitizations on the back of that, and then you recycle the capital again. You go around the circle. So I think that's the beauty of financial product, and I hope that share how all these different financial products that cater across the different ecosystem in the whole building sector.
And let me just ask one follow-up question, Tracy, before I shift around. All these kinds of financial products, particularly for Standard Chartered, they're not just available in Asia Pacific, correct? This is something that globally, as a bank, is available.
Absolutely. Yeah. Absolutely. These are global available products at Standard Chartered.
Thank you.
Just on retrofits, Lenny, if I can jump in, I think we are looking at a couple of aggregator models as well, where we're looking into pilot projects where we can help companies understand their existing portfolio into how far they are from the green benchmark, and then help them finance that transition again over that journey. I mean, keeping in mind what David has mentioned right up front, return on investment and end user demand. So it's a difficult problem in some ways, but I think for retrofits, I think the key issue is the deal size as well, and therefore we felt that the aggregator model through a concentration of ownership of a portfolio is one way. The other way which we are looking at is also aggregation through financial institutions. We lend out to the financial institution for a specific purpose, and they can on lend and take charge of that, which is sustainability linked and all that. So those are some of the things which are quite applicable on the retrofit side, but also applicable otherwise.
Harry, I got a few bits to say on retrofit, but I just wanted to see if there's anything you want to say on it.
Yeah. Yes. I think a very important point is, on the one hand, scale is something that's needed. But what I do hear from Tracy as well, and from Belly as well, is scale doesn't necessarily mean one big company with thousands of buildings. Scale also means many SMEs, many homeowners, if you will, right? And in both types of scale, if you will, there are huge opportunities, and there are financial products, and there are technology solutions. I'd be actually interested to hear, I'm not sure if we have time for that, but from Joseph, how he uses technology to help him build green. But sorry, David, back to you.
Cool. No, it's quite a good, something I'll finish on is quite a good segue for Joseph. So I just quickly, from a UK perspective on retrofit. So basically, if we don't sort out retrofit buildings, we will fail from a net zero perspective. So, there's loads of stats, isn't there, around 80% existing by 2050. So yeah, I think we've touched on it. New development done right is one of the easier aspects. It's the retrofit, and just from our experience today, obviously it's more complex due to the landlord and tenant. So the whole split incentive piece, getting access, doing the right thing, it's challenging. But what we are seeing on the corporate side doesn't solve for SMEs, I'm afraid. But see, more outside of the built environment, more and more corporates saying, I'm in the race to net zero. I've got my science-based target. I've got my plan. So obviously that should theoretically make scope 3 easier for real estate, and it should make landlord and tenant engagement easier on retrofit of buildings. As you can probably sense, I still don't, there's a lot of friction, isn't there, in delivering retrofit. Where are the people going to go? How are we going to continue to operate? So these are innately complex things. The reason, one of the things we did, and it leads on to Joseph really about tools, is we had a green lending initiative as £1 billion we deployed between 2016 and 2019. So we did that, and that was great. But then we reflected afterwards and said, hang on, we haven't actually helped that many clients, even though that's a big number. So that's why we went the other way. We still have discounted lending. So we've got about a £5 billion program of sustainability linked discounted lending now. But we decided to go the other way and launch a buildings tool, a green buildings tool, which is a digital tool. All of our clients can access it for free to start to understand how can I move the dial? Where do I invest? How do I retrofit? Because we found treasurers and sustainability people, even if they exist in that business, they don't necessarily always speak the same language. So we've sort of gone the other way and looked at technology. So for example, we recently put 200,000 houses through it in about 4 weeks. If I went and tried to get a consultant to do that, you know, as you know, that's a long lead time, that's a lot of cost. So that scalability is really important. I think the tools and the digital side to really mass change on retrofit, but it's complicated but important.
Thanks. And yeah, it does lead exactly into where we are today. I tell you, hopefully you have 1 minute for a short story in that having developed a shantytown replacement in Africa and built in the UK and built a classroom and then outlined projects in America and the Middle East, I decided to take a deeper look at what we were doing as a company. We combine energy, construction, and IoT. So we build an extremely airtight box, which is amazing, of a unique material that we own. We then put amazing energy technology in it. And then what we do is we supplement that with smart home tech, but it's a bit smarter than just normal smart home tech. So what we decided to do as an organization is go to that house I mentioned previously at the Building Research Establishment Park. And we put 10 kilowatts almost of the solar. We put in the latest technology heating cooling system from Samsung. And we built this thing that was 10 times the building airtight performance of a British standard regulated building. We were running the simulations for 2 months. We then installed a sensor, and we found the most impactful thing that we could do from even the most high performing building you can imagine was to know how that energy was being used, where that energy was being run, and actually if someone had just left a window or door open. That then took us to another adventure onto looking at retrofit. So I put some sensors in a 120-year-old house I bought. Instead of wrapping buildings around buildings, instead of trying to pretend to drive everything we know we can, it was very simple in that 2 windows in the house were leaky. We decarbonized it with an air source heat pump. And now I signed up to a 100% renewable tariff, and I live in a 100-year-old net zero home. Why? We found that the ability to understand your building through very affordable things, such as sensor technology, such as smart meter technology, and we've got a few cool ones like smart blinds for shading and a wireless light switch to keep it cool, and it can function with the rest of your Sonos or Bose, which we all know we love. What we found was the most impactful decision-making is smart decision-making for smart technology, and that we can actually address a huge problem in the market by just thinking a bit differently about what we put on our walls and the sockets and switches that we use.
Go on, Tracy.
So I will supplement. Yeah, I will supplement to wrap up my part. I think I agree with both points. I mean, the know-how. I think it go back to the beginning of the panel. We say the know-how. So from us, similar to what David did on finding out the tool to help the clients. So we identify IFC Edge Green Building Certification being the tool that to solve some of these pain points. So, like I raised earlier about need to decarbonize existing building and a variety of building structure, not just new building, and have a transparent, quantifiable measure like energy, water, embodied carbon number, percentage on the certificate, and a clear pathway to net zero, which is the really key topics about the sector. And to address all that, we realized that IFC Edge, and with the coverage across the globe as well, that is one good tool to solve some of these problems. So to that end, Standard Chartered being the first international bank to sign the MOU with Centennial and SGS to promote IFC Edge to all our clients across the globe with the complementary advisory services. And we already successfully execute the first green building acquisitions in Hong Kong, where the investor acquired an old industrial green building and going through green retrofit, like we talk about, and use Edge to certify. And I think that the know-how, the capacity building, webinar like this to really share the knowledge across the market is very important to move the needle to help the real estate sector to move towards net zero.
Thanks, Tracy. We have so many different questions that I will be sure to share them with the panel, and we'll definitely try and get back to you all via writing, because there's been some really great engagements, and thank you all for sharing. I do want to give everybody a chance to kind of share some closing thoughts, just keeping an eye on time. So I think Tracy kind of kicked us off really well with the idea that, to really unlock the finance, it's about sharing the know-how, and it's about connecting the dots between what's going on with the financing side, with the developers, with the building owners, to really show that it is possible, that there are solutions available. I'm going to pass the virtual microphone on to David to share his closing thoughts on how we actually unlock this green finance, which is available for real estate.
Yeah, so I think actually my takeaway really is looking at the global picture here. So we're a UK-based lender, but what's entirely evident for me from all the people joining is obviously these are global problems. So I think actually one of the takeaways is how can we do more stuff like this to ensure we're collaborating to see what is being done in different markets, because we have a common challenge around green buildings and decarbonisation. But actually, like someone said in the questions and chat, we've got different societal and environmental contexts as well. So I think that's my takeaway. I think for green finance, I would say it is moving fast. After a slowish start, I think we're really now starting to see that come through. And the important thing is just about doing it right. So I think the conversation we're having now about certification is important. But as a lot of people on the line have been saying, there's other stuff here as well. Where does the line start and stop? And I think those standards will keep going up as time goes by, just from a regulatory perspective, but also what market participants expect and want as well.
Absolutely. And maybe one thought maybe to add, Vali, if this can weave into your answer as well, is some of the questions that we've received as well have been around when thinking about financing for green buildings, the difference between directly financing the improvements for a building versus using the green asset to access financing for other things, or looking at the green financing in a more holistic context. So how is this particular investment affecting the greenness of an economy or something like that? So it is, I think, kind of tying to David's point, where do you draw the lines? Where are the boundaries? How does it all fit together? Sorry, just to add a nice big complication to your closing statement, Vali, but if it comes up, perhaps.
Yeah, I mean, yes, I think a lot of this discussion can be, it's a continuing of discussion even after this session, I guess. But we are, I think, very open to looking at innovative new products in this space. For instance, Edge started 10 plus years ago for us. We're moving into Edge Advanced and others to journey to net zero. And we see that now it is being adopted by the market for quite a while now, but still it was a journey. So I just want to come back to the point about the awareness, but also the point about it's to have patience in terms of going forward to find a solution collectively on this very important issue. And I think coming back to David's initial comments, I think it's important to have implementable and financeable solutions coming out. But Eleni, to the complication that you added, I think really it's we are open to looking at customizing solutions for our. So there's no like cookie cutter thing that we are looking at that we do as normal business. But increasingly in the last 2+ years, we are looking at customizing solutions for various types of issues that you just alluded to. But in the interest of time, I'll stop there.
No, and I think that's a great point to say that there are some standard offers and there are standard products out in the market, but also there's so much innovation happening from the financial sector as well. And I think being able to understand what's going on in the market, knock on some doors and engage on some of these topics is an important step.
Yeah.
On to you, Joe.
Yeah, collaboration. Like, I've done a few of these recently, especially in the UK circuit. And when tech meets money, things get green. That's the reality of it. And I think tech has met money. Money is now green is the new green. And I think the driving factor is going to be the tech industry in movement with the financial industry, making outside of government decisions, such as the site us and Lloyds are doing together is a standout site using Edge accreditation, never been done in Britain. It's going to force the national and regional and international changes. So whilst the net zero agenda is being set at the extreme high level, which doesn't filter down properly, the tech and finance level filtering up, it means it will start getting a consolidated message from government around what works, what can be financed, and what can be achieved.
Harry?
Yeah, I would say maybe some final words. I hope everyone can see the groundwork has been done. The market is ready. Financial institutions already have available financial green products. It's nothing new. I think we need developers and building owners to commit and actively engage with banks and investors to get support in realizing a concrete plan towards zero carbon, refurbishment, or new construction. We already have global building owners or developers like Joseph with Etopia, which are focusing on utilizing existing technology to make the transition a reality. So as a final statement, I would say the time of planning is over. It's time to act and implement.
Thank you, Harry. I think those are powerful last words, and really hopefully have connected the dots between this conversation and showing that funding the net zero transition is happening, it's around us, and it's now time to really shift the needle. Thank you all so very much for joining us. We will be sharing the recording after this event, so you can always watch it. There's been so many valuable insights in this, so I'm definitely highly recommend rewatching it. Thank you all again. Have a lovely morning, afternoon, or evening, depending on where you are. And a big thank you to our panel who have spent an hour with us really sharing our insights. Thank you all and have a good day.
Thank you. Bye-bye.
Bye.